Good afternoon and good evening to everyone, and thank you for joining us. I am pleased to welcome our distinguished panel of experts, Lisa Curvio, who is head of the Joint SDG Fund Secretariat at the United Nations, Jean-Philippe de Schrevel, founder and managing partner at Bamboo Capital, and Borbega Solio, Director General at NORAD. Welcome, and thank you all again for joining us in this important conversation about making blended finance work for the SDGs. Now, given our limited time, I respectfully ask you all to keep each intervention to 4 minutes. Please also keep your microphones on mute until it is your turn to speak. Thank you. And to the audience, please feel free to post questions and comments in the chat, and we will respond to these during the Q&A session. So Lisa, I'd like for you to kick off the discussion today by sharing the work done by the UN Joint SDG Fund and how you catalyze greater volumes of private capital into blended finance transactions. Lisa.
Thank you so much, Ladé, and colleagues. I'm delighted to be here. Congratulations to Business for Peace Foundation for this event. Echoing our Deputy Secretary General Amina Mohammed, who a few minutes ago talked about the quantum leap. I'm delighted to also be here as a part of the United Nations team around the world representing really the need to build back better, and how, if we are to get back on track towards the SDGs, how do we mobilize that financing? And I'm thrilled to say that the United Nations created the Joint SDG Fund through the member states of the General Assembly, who created us in 2019 to really help us blend finance in a whole new way. And the panel that I'm on today, with one of our generous donors represented, Norway, as well as one of our critical private sector partners, Bamboo Capital, to me is emblematic of the change we want to see and that quantum leap. So maybe just a few things about what we do. The Deputy Secretary General mentioned financing frameworks at the national level, which is the ecosystem that helps to prepare policymakers, parliamentarians, ministers of finance, the government workings that enable private sector investment. That's a piece of what we do, because a huge part of the UN work is capacity strengthening at country level. But a very exciting part that we're talking about today is this dream of bringing Wall Street and the focus on ESG, the focus on impact investing, to meet the needs of countries that are still off the radar, that still don't attract the portfolio managers, the pension fund owners, the asset managers, the way we think they should. And we, as the Joint SDG Fund, are staffed by experts across the entire development system, across our member states, to provide catalytic grant capital to unlock the private capital. And I just think because Jean-Philippe is on the panel today, we are working very specifically together in Malawi. And I think what's really exciting about Malawi is that it's the first of its kind. It's structuring the first blended financing vehicle in a least developed country in Africa. And it's going to create opportunities not only to achieve the SDGs, but to enable over 50 businesses, we hope, to flourish in the next few years. We are the de-risking agent. We are that honest broker as the United Nations, and then we offer that first loss layer to attract others. And I'd love to hear what Jean-Philippe thinks about our role, as well as Borbega, because obviously we are entering this space knowing that we have expertise at country level that often might not be understood by development banks, the IFIs, et cetera. The example of Malawi, it really aims for the UN to serve as a catalyst to provide the continuum of financing and technical assistance to bridge that gap, right? So when smaller investments can't attract the larger, they're not bankable because they're not large enough, how can we help with everything from supply chains to investor confidence? So we're really thrilled to be able to discuss that today, to really let people know that we are a new part of the United Nations, that we are working already in over 120 countries, that we have a pipeline of proposals that are ready to be invested. And we're really excited to work with all of you to meet the SDGs. Thank you so much.
Thank you so much, Lisa. Those are some very interesting points you raised, and it's great to hear that there's activity happening in an LDC like Malawi, where typically there's a lot of activity in the middle income and upper middle income countries. So it's great that you are providing that leadership to help diversify where that capital is going. So coming to you, Jean-Philippe, could you share with us briefly Bamboo Capital's investment focus and what you have observed specifically as levers that could catalyze greater volumes of private investment towards blended finance?
Sure, thank you very much, and pleasure to be with you. Cannot agree more than with what Lisa just said. But very briefly, Bamboo has been operating for 14 years now in the least developed countries and emerging markets. We're financing SMEs, early stage companies that do deliver essential goods and services to very poor people. And we operate there because we believe that's where the most impact is generated. But it's a tough job. And if you are going to attract the private sector to those type of investment strategies, Lisa's right, we need to de-risk, we need the blended finance tools, we need some guarantees. Otherwise, you're not going to attract the private sector to those markets, at least in the early stage segment of SMEs. What we have also realized is that in order to go longer and further, partnerships are certainly the way to go. And as you may know, we have structured a couple of partnership with UN agencies and international NGOs. And what we see in those partnerships is the possibility to bring together two very distinct set of capabilities that are actually very complementary. On one hand, the boots on the ground, presence in the trenches, abilities to deal source, ability to bring technical assistance, as Lisa was mentioning, ability to assess the impact we say we are going to generate and report on it. And you couple that with maybe what I would call the financial discipline of the investment process of the private sector, the risk management, the portfolio building and construction. And together, I do believe that we can advance the SDGs quite dramatically. The important thing here is to be aligned on the vision, on the mission, have the incentives aligned, know exactly who does what, meaning the division of roles. But I think this can certainly be scaled up, and hopefully we talk about that in a minute. But that's what we're busy doing, and just to name them, because I think they are doing a fantastic job. We're working with UNCDF, we're working with the Stop TB Partnership, we're working with the International Trade Center, we're working with IFAD, we're working with the Smart Africa Alliance, and with CARE USA, and those are great partners, great partnerships, and our hope actually going forward would be to have those partners actually come together to represent scale and scalable investment opportunities for the private sector. So thank you, Ladé, thank you everyone, and hopefully we can discuss this.
Wonderful, thank you so much, Jean-Philippe. And something you said really resonates with, I think, the entire concept of blended finance, which is really bringing together complementary but distinct capabilities and leveraging the strengths of the different players within the capital continuum. I think that's a very important point that we need to underscore. And it's really, exciting to see that you've already had these types of conversations and are working across even the various UN agencies to get more transactions done. So coming to you, Board Vega, NORAD plays a very important role in blended finance. Could you tell us a bit more about some of the activities that you're involved in and also how you see engaging private sector?
Sure, I'm happy to do that. Let me just first commend Business for Peace with another great event, this time a digital event and coming to close very soon. It's true what you're saying. NORAD is, of course, we are the aid management agency of Norway. Norway is one of very few countries providing more than 0.7 of our gross national income to international development, actually more than 1%. And we do it through different means. So there's a separate development finance institution, and then you have NORAD. we manage approximately half of total aid, including a lot of partnerships with the private sector of different kinds. Let me just also first frame the challenge the way I see it, right? We have this grossly ambitious work plan, the Sustainable Development Goals, which we all share. And then, you know, and it's really ambitious, really with really tough goals. And then it has, you know, some huge challenges to reach it. And first is enter COVID-19, because after a generation of progress, we are seeing the opposite right now, especially in developing countries. Extreme poverty is rising. Hunger has been doubled according to the World Food Programme. Also huge challenges in health and education and so on. And our common challenge is, of course, to build back better. But at the same time, challenge number 2, private investments, foreign direct investments, for instance, is substantially down, probably down by around a third or so since COVID-19 started. So we're not on the right track even, we're actually on the wrong track, even though official development assistance, ODA, was marginally up. And then it's the third challenge, which and it was really interesting to listen to the Malawi example, because the capital is not going to, or at least not enough of the private capital is going to the most vulnerable, to the places where it's not most needed. We did the Norwegian review, and we also looked at all Norwegian foreign direct investment, and we also did some comparisons with the other Nordic countries, and only 0.23% of all FDI from Norway goes to the least developed countries. And also when we looked at the lower middle income countries, it was just a few percentage points. So there's also a huge challenge of channeling it to the places where it's really mostly needed. So what we are doing, we are partnering. That's, you know, everything we do is with a partner basically, and we partner for feasibility studies. You know, those early studies you do to find out, is it possible? Is there a market here? How can we do things? Then secondly, we create strategic partnerships. Happy to tell you more about that and give example afterwards. And then we do guarantees and assess risk. And I'll return to risk afterwards, because I think that's a key concept that we have to discuss if we are to really scale up.
Those are some very good points that you've raised, Bård Vega, and this is a really good segue into the next question that I'd like to ask, which is really thinking about how you get capital to the most vulnerable, but also scale significantly. Now, the data that we have shows that blended finance really is only mobilizing at, you know, in the past few years, between $12 to $15 billion towards the SDGs. That is peanuts, you know, considering the large funding gap and just the ambitious goals that we're trying to achieve by 2030. We also find out that sometimes we fall into a scenario where concessional capital is willing to come to the table, but it wants to see a commitment from the private investor. And the private investor is also interested, but they want to see that initial commitment in writing from the concessional capital provider. It could be first loss, it could be guarantees, technical assistance. So we find ourselves in a bit of a chicken and egg situation. So Lisa, what are your thoughts around this? What is the workaround, and how do we ensure that, you know, both sides of the table can actually move, and that things, that we progress and we get more capital flowing?
No, I think, Ladé, it's an excellent question. And I think one that we're discovering is the critical moment to not lose potentially committed ESG investors from what the United Nations is trying to do in emerging markets, which goes to the perception of risk, which goes to what they understand our role to be. So So we as honest brokers, we as trying to be that convener, are obviously trying to bring in both sides, if you will, whoever the chicken or whoever the egg is. And I do think we are trying to show proof of concept in 4 initial investments, right? Which don't go beyond 200 million, right? They're relatively small in the scheme of things. But what we're trying to show is that a fund of funds in a Malawi, can use the public money from a Norway, from a Sweden, a Denmark, et cetera, to help bring in bamboo capital, right? And I think, and we're working on the paperwork now, right? How do we ensure, what does that letter say? How do what a letter of intent means to Jean-Philippe match what it might mean to Bard Vegar over at NORAD? Sometimes those letters don't match. And I think this is the moment we have to create the new understanding, and we have to do it together. It takes a little bit of patience and patient capital, right? We need a little patience with each other, but I think if the willingness is there, I think we can make it happen. And I do think, if not now, when? COVID-19 has, just changed everything we knew about our planet. If not now, when can solidarity and our human nature bring us more together than now? So we are committed to finding a way. If it has to go to legal, we go to legal and we make it happen.
That's excellent to hear, Lisa. And we need more people like you on the front lines, making these types of decisions and being that honest broker, facilitating interactions between concessional capital and the private investor. So coming to you, Jean-Philippe, what are your thoughts around this? Do you agree? Do you disagree? What has been the experience of Bamboo Capital, and how have you navigated this?
Well, the first answer is we need Lisa, we need Bard Vegar, support. And actually, NORAD is supporting one of our funds on the first loss tranche, and Lisa is supporting as well in Malawi, as she said, and that's fantastic. The only thing I would say is we need more, we need faster, and then of course we need them to, as you said, Lisa, we need proof of concept, meaning that we then need the private sector to say, okay, you're de-risking and you took the first step, then here we are. And you say you're a broker, we feel we're a broker too, because actually we are bringing private investors, we are structuring the funds, and you're kind enough to be the catalytic investor in the first loss, but we're sort of a matchmaker as well, because we have to be credible in the way that we structure those products, and we can count on this first loss that's coming. And then we can talk to the private sector, and it's very difficult for us to go to the private sector and say, believe us, it's coming, when actually I cannot prove that the money's there, right? So it's and in the end I'm thinking, oh, who's trying to catalyze whom, right? So if we want to attract the private sector, I think we have to make this leap of faith that this is going to happen. Otherwise, it's very tough. But as you said, Lisa, this is a joint work. This is teamwork. We're working on this. We're going to make it happen, and then we're going to scale it. The other thing I wanted to say, Ladé, in terms of the scale, is that during many webinars, I'm hearing the numbers, as Bard Vegar was saying. We hear about the trillions and the billions, but you know what? Even for $100 billion fund, it's tough to find money, right? So I'm thinking, let's go with those proof of concepts. Let's make them work, and then we can scale them. Another option to get to scale, and this is something we're trying very hard. It's not easy, but one day we're going to get there, is actually to pool those funds together, because then suddenly you represent a significant investment opportunity for those Wall Street investors. And if you further de-risk them with guarantees, for example, we can be creative, or through structured finance, or through layering of risk levels and layers. I'm absolutely convinced we can get there. And everybody participating, every partner participating, will of course benefit, because the whole will be more than the sum of the parts. And that's just fantastic. So to us, that's the way forward. But as we say in English, you have to walk before you run, right? So let's do this.
That's a very great point, Jean-Philippe, and especially when you're thinking about, in your case, investing in SMEs. In Africa, tickets are very small. So trying to get a private investor to come in, and you're talking about, you know, a $10–20 million investment, that's really not appealing to them. The transaction cost is really high. So thinking about pooling resources and creating, you know, a large fund or facility that can then invest smaller tickets, I think makes a lot of sense. So I think you've hit on a very important point. So Bart Vega, as our very important concessional capital provider, what are your thoughts around this? And, you know, how is NORAD able to also navigate this chicken and egg situation?
You know, when you have a chicken and egg situation, sometimes it can lead to an outcome where nothing happens, right? But there are also situations where it leads to everyone acting at the same time, and we're actually able to figure out something. And I think at least the best cases I've seen from our perspective, it's been a bit like that. We've done huge renewable energy investments in Mozambique and Nepal, for instance, where typically we have had a role. We've had typically an early upscaling feasibility study role, maybe technical assistance. Then there's a huge private investor. Then there's a DFI. Then there's maybe one or several embassies that have had a role, you know, as you know, in connecting the dots and talking to the local government and so on. And by working in that way, many actors are able to combine our strengths to get results. And it's a bit like Lisa said, yeah, when you are able to do that, we're at our best. Then just a few words about scaling up from a donor's perspective or from a concessional capitalist perspective, how we're thinking. And my first point is that I think you have to think about being catalytic in two ways, directly and indirectly. And by indirectly, I mean working with the foundations of what's making investments possible. For instance, Norway, we're investing a lot in education around the world. Well, it might not look catalytic, but try establishing a profitable business without educated workforce. We have something called the Knowledge Bank. We are cooperating with partner countries on institutions, on making better institutions for their management of natural resources, their tax management, their general auditor, and so on. Well, good, and of course anti-corruption. Well, good institutions that makes it provides security and makes it less risky to invest. So that's one way of thinking about scaling up and making it easier for private capital to actually move in. And then of course we have the more catalytic direct instruments. And we are looking now empirically a bit around what's working for other donors, which things have been successful. And a few findings. First, of course, the OECD finds that there probably are too many instruments, hundreds of instruments, and it can actually be a bit chaotic for many investors how to figure out, you know, where to go, what kind of instrument work for us. I think that's an important point. And another thing we're seeing is the most successful instruments, not always, but often, seems to be those who assess risk. Guarantees, for instance, first loss facilities, others. And we are seeing with our new guarantee scheme that we are able to mobilize, you know, 30 times, 20 times, 5 to 30 times the amount we're putting in. And when we're doing that on renewable energy, that's a real good example of how we can spend. It's a substantial sum, of course, of ODA money, but still we're able to mobilize a much bigger investment at the same time by actually addressing the issue of risk, like Jean-Philippe also mentioned.
That's an excellent point, Bart Vega. And I think, you know, just talking about the multiplicity of instruments and products and structures, innovation is good, but too much innovation can sometimes actually stifle you from making progress. So maybe we do need to think about how we simplify some of these instruments and just rinse and repeat, you know, what has worked in the past and think about how we can scale them. I also really like your point about leverage. And this really feeds in nicely into this concept of partnership and blended finance. If you think about it, we have less than a decade to go. This is 2021. We have to achieve these goals by 2030. The only way we're going to get there is through leverage, through partnerships. So I'd love to hear from you. You've talked about partnerships in some of the examples you used, but how do you see partnerships moving forward to really fast track and scale blended finance so that we can achieve these ambitious goals by 2030? I'm going to come back to you, Lisa, to kick us off.
Yeah, no, I mean, I think the DSG said it herself, right? We have to build the ecosystem that attracts all of us into this conversation. And then we have to follow up with all the hard work that's needed to make it happen. You know, behind the scenes, you know, in the kitchen, it gets hot over the stove. And I think what we need to do is facilitate that, especially for the newcomers. I'm in a new conversation with a private investor twice, 3 times a week, and it is a new conversation. I speak UN, I speak SDGs. I mean, Bart started with talking about how many people have slipped below the poverty line. You know, that is not on a spreadsheet that goes to the board of a multinational corporation. But we're all in this together, and there are commitments being made. So now we're taking, you know, poverty and fintech for women's empowerment into, you know, those spreadsheets. And I think that's where it really matters. That's going to be that acceleration that we all want. And that's going to make the next 9 years so pivotal. But we have to be open, and we have to be energetic, and we have to say we can overcome it, because it's not business as usual. It's just for any of us. This is new, I think, for all of us. So I think acknowledging that and putting our best foot forward is really critical.
Thank you, Lisa. Fully agree with you. Jean-Philippe, as a fund manager and investor, who else needs to be at the table? Who else should we be partnering with to really scale blended finance to get us to the SDGs by 2030?
Well, you know, it's as Lisa said, it's a conjunction of several, you know, parties and capabilities, because alone you're not gonna move the needle. I think we need those proof of concepts in the types of products we have been discussing. I think we need this first loss or those guarantees coming in to de-risk. I think we need to engage with large scale private institutional investors early on, so that they, you know, get up to speed, and it's a steep learning curve. But by the time we get those proofs of concept, you know, running and in execution, and by the time we have figured out how to aggregate and scale by aggregation, they will then be ready to engage. So the sooner you engage, the sooner you are didactic, the sooner you explain, I believe that the better chances you have to bring those guys on board, and they are the ones who are going to move the needle, believe it or not. You know, if the minute you get those big Wall Street private firms seriously interested in, you know, coming into the field we're discussing here, with the firepower of the capital that they have, but that they feel that there's a readily investable, you know, proven concept or product, I don't hesitate for a minute to say that they are going to come. But we need to be ready to welcome them, and in order to do that, we have to engage with them and explain what this is all about. And as you said, Lisa, also it's all about risk perception, and how do you address not only the risk, the real risk, but how do you address the perception of the risk? And that's very, very important in my opinion. And I think we are together capable of showing significant data sets, so that, you know, it's not only ideas, but those are facts that we can present to those investors, hopefully over time. And that's what's going to move the needle. And then I also believe that with each of our partners, and they are, you know, major big partners, we're tiny bamboo, right? There will be many other investment managers, many other impact investors willing to engage with them. And what we think we should, hopefully succeed in doing is to get to a level of standardization of the deal sourcing and the deal preparation from our partners, so that they really get us up to speed and to scale in terms of how do we reach out to those tens, hundreds of millions of SMEs that still need to get access to finance. And that's the pain point today. So I'll stop here.
Some very great points that you've raised, Jean-Philippe. For Vega, as a donor, who else do you need to be partnering with? Where do you need to deepen partnerships? Who's not at the table? It should be.
Great question. I think I can only say that we always partner. I mean, we don't implement ourselves. We always partner with someone. It could be a country, right? Bilaterally. We work through, of course, a lot of what we do is through multilateral channels. IFC, for instance, of course, Amiga or ATI or many others, or guarantee schemes. We do have some application-based schemes, right, where we put it out and we let there be competition on who are coming in or delivering the best projects and so on. And then we do strategic partnerships, but we could definitely do more. And I think, I mean, just to connect two issues here, your question on the chicken and egg situation and what Jean-Philippe just said about the perceived risk, which I think is an important element here. So do huge companies and investors, do they think poverty or do they think possibilities when they think about Africa? That's really important. And I think there's a common challenge making huge investors with a lot of capital which doesn't always find a lot of good investments now in OECD countries, making them see the huge potential in many developing countries, whether it be in Africa or on other continents. And that I think we underestimate that from time to time. It's not only about the real, the political risk or economic risk, that's important, but also about perception. For instance, understanding how much renewable energy we have to develop in the next decades, how low the price on solar and wind and so on has come, and the potential, and also then being able to have the guarantee schemes, first loss facilities, other instruments, and being willing to partner and to discuss and to find good solutions. That, I think, that's partnering at its best.
Excellent. Thank you so much for that, Vega. So we have some questions coming in. I will read a couple out and allow the panelists to determine who wants to contribute. So the first question is from Per Bondevik, and he asks, what role, if any, do you see for development NGOs to de-risk? These NGOs and their local partners will in general have long-standing context, competence, and cultural knowledge in high-risk markets that are in need of capital. So what is the role for development NGOs to de-risk? Who would like to tackle that? Lisa, please go ahead.
No, I think it's an excellent question. And certainly civil society is one of the largest stakeholders that the United Nations involves when these deals, when these possibilities for investment are being considered, right? We want these to be people first. These are SDG investments. So at the ultimate goal of any of these are to lessen the burden on the most vulnerable, to empower women, to bring inequality to bear, to reduce poverty, to increase education and healthcare. So I think the answer is in every aspect that could be touched by such an investment, those development NGOs that know those communities, that know those who would be impacted, whether positively or negatively, must be engaged. I was also based in Mozambique when the oil and gas industry was coming in, following coal and other industries. And a huge part that I played within UNICEF was to ensure that we were having those stakeholders in every discussion with government, with private sector, So they have to keep us honest. There's no one like a development NGO at the local level to keep us seeing the last mile and the impact of what might be, you know, dreamt up in a boardroom somewhere around the world. So we really need to stay local in our planning and be true to the mandates that all of us represent. Impact investing means impact first, right? Of course, yes, a return, but the first return of impact investing is for the people. So I think they have to be at that table. If they're not there yet, demand it, you know, knock on those doors and make sure that those voices are heard. Thank you.
Thank you, Lisa. Jean-Philippe, please go ahead.
No, just if I may, I think it's a great response. And this is something that we're living already for an international NGO, right, called Care USA and Care Enterprise. And we're working with them, and we're actually co-managing our first gender fund with them. And that's just a fascinating, you know, engagement, because we each have our own vision of the same reality and are saying, you know, the very complementary, again, as I said, skills and ways of assessing an investment. And that's very rich when it comes to investment management for impact. And that's clearly a role that I believe international NGOs can play. It's really bringing their knowledge and their capabilities on the ground, their knowledge of the companies that are doing well, the knowledge of, you know, how do you trigger most impact for every dollar invested? And that's their job, and we have a lot to learn from them. So if we team up, that's great.
Thank you, Jean-Philippe. Bart Begert, would you like to contribute to that?
Yeah, yes, very much, because I think NGOs can play a really important role, to be honest. And I just wanted to tell, I mean, we have this scheme. It's a form of strategic partnerships. It's application based, where we are inviting private companies and NGOs to apply together and to form strategic partnerships to deal with specific local issues. It could be a value chain that the companies need to develop, or it could be in the social and economic context they're working on that isn't working to provide a good product line or so on. And what we see is, of course, the company brings in a lot of competence on their, you know, on investing and getting the product right and so on. But no one knows the local context better than the NGO, and they're able to work with the local communities and so on. And that has been quite successful. And when the last time we did a round of applications now, it was hugely popular. So we got quality application far beyond what we had capital for, unfortunately. But I think that this coming from different contracts now, those who really knows what they're doing on the ground, they're able to get out there and working together with those who are coming in with the private sector perspective. That's a really important way to work.
Thank you so much, Bart Begert. So what I'm hearing, the common thread is stay local. So we have a few more questions coming in, but I am mindful that we have just about 5 minutes left. So what I will do is read out 2 questions, and I will allow the panel to decide who would like to answer. So the first is from Saeed Mohammed, and he asks, how do we assess the need for blended finance within the context of market restrictions and market failures? And the second question is from Sei Imamura, who asks, do you see the need to manage expectations of private investors in terms of financial impacts? So I'm guessing that's referring to returns. So the first question again is, you know, how do we assess the need for blended finance within market restrictions and market failures? And the second one is managing expectations of investors. So who would like to tackle either of these? Lisa, please go ahead.
Ladé. No, I think, I mean, we certainly look at the needs of countries. You know, governments are repeatedly raising their hands and saying, we'd like to move into this space. We see our neighbors, we see others, we have domestic resources, we want to skill up our workforce. So we see numerous approaches. We seek to float a green bond, a blue bond. there's so many ways that we assess. I mean, we assess it by responding to government demand, if you will, because we as the UN work at the behest of those governments. And of course, it's our generous donors who enable us to do that. The second question about return, I mean, it is a difficult thing for us to mention, given we're called a fund. We're not supposed to be looking for that traditional grant, which is 75 years of history of the UN, has been very much a grant-making facility. What we're trying to show is that we have unique, I think Bart Weger said, boots on the ground, right? We have a presence that we believe can help us shift into impact investing, but we cannot offer market returns right now. And that's just part of that challenge. And I think it is that example in Malawi to really show how we can turn that around and start to get from single digits into double-digit returns. That really is the hope that we certainly are striving for. Thank you.
Thank you, Lisa. Jean-Philippe Vega, and please try to keep it to a minute each.
Okay, so very quickly, just on maybe on the financial returns, maybe I will I will tell something that is not very politically correct, but I'm always questioning the expectations of the private sector on financial returns, because in itself they are inflated anyway. When somebody comes to me and says, well, I want a 20% internal rate of return in US dollar on my private equity, otherwise I don't invest, I'm always tempted to ask, okay, so what's your track record of getting those 20% over the last 15 years? And usually none have achieved that. So, you know, we have to manage expectations both ways, I would say. The second is, the answer is quite easy on financial returns, specifically on private debt. I mean, if you look at the track record on, you know, the default on portfolios that managers and any manager is actually, you know, doing in emerging markets, and you size that percentage with the first loss tranche of your blended finance product. I'm sorry, and I know my risk manager tells me not to say that, but it's to the point where your senior tranches sometimes are almost virtually risk-free, right? And they still get a 3, 4, 5% you know, return for such investments. So when you look at returns, you look at the risk-adjusted return, right? So that you compare apple to apple. And I feel very comfortable managing the expectations of the private sector that at very least on the private debt side, we can deliver market-based returns, risk-adjusted returns.
Great point, Jean-Philippe. Thank you. Bart Vega, you have the final word.
Well, mindful of the time, I think I'm fully behind Lisa and Jean-Philippe on this one. And just to sum up, I mean, I sometimes say my role is not to manage the expectations on returns, but to manage their expectations on the world we are moving into. That it needs to be sustainable, and it's good for us. So it's important also for private investment firms and other investments in OECD countries that we're dealing with the climate crisis and nature loss and global inequality. So it's also part of being an investor.
Thank you so much. So doing good is good for business. They're not mutually exclusive. On that note, I would like to sincerely thank our esteemed panelists, Lisa Kerviel, Jean-Philippe de Schrevel, Bart Vega, Soliel, for their very insightful contributions to this afternoon's discussion. And I'd like to thank the Business for Peace Foundation for making this platform available to all of us. And now I'd like to hand it over to Marius Ducker, who is Managing Director at the Business for Peace, to give us some closing remarks. Thank you so much.
Thank you very much. Distinguished guests, ladies and gentlemen, it is a pleasure to join you again as we come to a close of our 3-day spotlight series on decent work and sustainable economic growth. This week, we have examined our shared objective to rebuild better systems of work, looked at ways to improve visibility for marginalized groups, and explored why our global challenges in the end are real business opportunities with the SDGs serving as a common roadmap and action plan for us all. Even before the pandemic, the world was not on track to achieve the global goals, and certainly not SDG 8. Obstacles such as increased poverty and inequality and the lack of trust in governments and institutions have all magnified the impact of the pandemic and have stalled many efforts in ensuring decent work and economic growth. By shining a light on these issues, we call on the global business community to take action. It is clear that the principles at the core of SDG 8, inclusive and sustainable economic growth, employment and decent work for everyone, cut across the 2030 agenda and must guide our efforts going forward. As Deputy Secretary General Amina Mohammed reminded us of earlier today, it is time to shift mindsets away from short-term economic profit to long-term thinking that anticipates risks and democratizes opportunities for decent work. We have heard from expert panelists and global leaders from both public and private sector, whose experience and insights help guide the way forward. Before we conclude this Friday afternoon, I'd just like to take this opportunity to highlight a few themes coming out of the discussions over the past few days. First, leave no one behind. An inclusive approach to the future work is essential. The impact of population growth, accelerating technological change, and continued globalization brings new responsibilities, but also new opportunities to businesses everywhere. In order to rebuild the trust required to advance towards decent work and economic growth, we must make laws and institutions work for people. A people-centered approach is needed to empower justice and to promote equitable outcomes. Corruption remains a key threat and is both a driver of growing discontent and a challenge to sustainable development overall. Weak governance is associated with lower growth, lower investments, and lower tax returns, and with greater inequality and social exclusion. Secondly, businesses must strive to create a workforce capable of adapting to changing environments, now so more than ever before. Businesses that succeed in this area can not only help employees adapt to changing technologies and work environments, but research clearly shows that investing in developing human capital ultimately has a positive impact on the bottom line and the communities in which they operate. Thirdly, and lastly, sustainable investing is critical to meeting the global goals. While there is no lack of capital in the world, the gap to finance the SDGs can only be closed if investors everywhere understands that a business-worthy mindset is required to secure long-term sustainable investment returns. Furthermore, transparency, impact reporting, de-risking, and increased public-private collaboration will be needed to scale sustainable finance. Ultimately, the challenge we face is one of leadership. We need to be bold, innovative, and committed to achieve the global goals. We all must assume ownership so that no one is left behind. This Spotlight series is proof that each of us brings something to the table. It is clear that a renewed commitment to collaboration centered around the 2030 agenda is needed to tackle challenges that are too great for any one of us to solve alone. It is this spirit that we organized the 2021 Business for Peace Spotlight series. I would like to thank all of you, our distinguished speakers, our engaged participants, for taking the time for these impactful discussions. And also a very special thanks to Multiconsult in Oslo for hosting our staff for the duration of this series. We now look ahead, putting the insights gained at the Spotlights into practice as we seek to accelerate progress towards SDG 8 and the rest of the 2030 agenda. We are now at a turning point, and the decisions and actions we take now will echo long into the future. Our decisions on economic recovery, climate change, and international trade and cooperation will shape decent work and economic growth for generations to come. We now have a unique opportunity to work more closely together across the globe and across the public-private domain and help build a more prosperous and peaceful world for all. It is the best investment we can make. Thank you.